Based on these trends, it looks like it should have been done in 2024, but maybe they were busy with elections. Today I'll be covering what to expect for 2026 in the HDB and private property markets and how you need to posture yourself if you're looking to do a property move this year. For HDB, to give you a preview of what's been happening since COVID, let's go through the number of HDB transactions since 2020. In 2020, we had 24,748 transactions, the year that we had 2 months of circuit breaker. 2021, 31,017 transactions, and that was the start of the HDB boom. In 2022, we had 27,896 transactions. In 2023, 26,000 over transactions. 2024, 28,000 over transactions, a pickup. And finally, in 2025, HDB released the confirmed data of 20,913 for the first 3 quarters of the year. And the last quarter is not out yet, but it's likely to push us into the 26,000 range. If you have been following the market, you would know that October 2025 saw a massive 38% drop in HDB resale transactions. Why? It could be because of the delayed Hungry Ghost Festival, and the more likely reason was because we are seeing a systemic shock to the supply. The government announced in August last year that it will be pumping out approximately 55,000 BTO units between 2025 and 2027. And just earlier this year, they even stated that they want to push it beyond 55,000 units now. In 2025 alone, over 19,000 BTO units hit the market and over 10,000 sales of balance units were up for grab. Buyers were being diverted away from the resale market and back into the BTO market. They have since decided to stay on the fence before committing to their purchase, affecting resale transactions and prices alike. By referencing the government's 55,000 number, this also means that there will be an additional 35,000 BTO units coming out this year, averaging to at least 17,500 more units each year. And if you thought that supply was an issue, here's another big number, 13,480. That's the number of flats hitting MOP in 2026, doubling from the 6,900 we saw in 2025. This wave is concentrated in Punggol, Queenstown, Tampines, and Toa Payoh. It is also evident that resale transaction prices are slowing. In the URA Q4 flash reports, it states that 4th quarter 2025 resale price index is at 203.6, largely unchanged from the 3rd quarter's 203.7. This is perhaps the first time resale prices have remained unchanged since 1st quarter of 2020 during the COVID period. And to give you an overview, let's run through some of the numbers. In 2020, 5%, which was mostly driven by year and post-lockdown sales. 2021, 12.7%, where we saw the biggest HDB boom in recent years. And to understand how big this actually is, it means that each quarter yielded at least a 3% growth. In 2022, we had 10.4%. 2023, we had 4.9%, largely due to the new cooling measures, such as LTV to the HDB loan, and also because condo downgraders were getting hit by the 15-month wait-out period. In 2024, we had a pickup at 9.7%, and 2025 ended off with a 2.9%. 2.9% for an entire year is crazy because it's lower than some of the quarterly growths in the previous years. This goes to show how many people are now sitting on the fence because of the government's BTO announcement in August 2025. With prices stagnating and transaction volume falling 10% from previous years, with new supply from the government in terms of BTOs and also a huge wave of MOP flats coming, it sounds like the HDB resale market is finally showing tangible signs of slowing down. HDB and the government have done it. They finally achieved a sustainable growth rate for HDBs. So after all these numbers, what's next? Number 1, because of the resale market cooling, this could finally be the year where the government finally removes the 15-month wait-out period for private downgraders. This move would bring cash-rich buyers back into the HDB market and potentially filling in the gap left behind by all these new supplies. There is also the possibility of HDB increasing income ceilings and eligibility of first-time buyers this year. Apart from it being an election topic last year, it is also because the last income ceiling adjustment was all the way back in 2019. And based on historical data, it seems like this happens every 4 to 5 years, and we are now overdue for it. The data I have here for income ceiling shows as August 2011, the income ceiling for HDB for subsidized flats increased to $10,000. In August 2015, it increased to $12,000. In September 2019, it increased to $14,000. Based on these trends, It looks like it should have been done in 2024, but maybe they were busy with elections. And so for sellers, listen up, your competition has just increased multiple fold this year. We are heading into 2026 with twice the inventory of unsold resale units compared to last year, and also the new MOP and BTO supplies. We are no longer in the COVID level pricing and demand era. HDB resale prices were dead flat in Q4 2025 for the first time in 6 years. Buyers are now BTO and SBF triers. They're gonna be coming back to the resale market only if they eventually fail their ballots. If you overprice now, you're not testing the market, you're just helping your neighbors sell their units by making theirs look like a bargain. Additionally, if you're selling an older flat, maybe 20 or 30 years old, your competition is even stiffer. You will be competing with an estimated 17,500 BTO units this year and an additional 13,480 MOP units. Almost 30,000 flats which are newer than yours combined. So be realistic about your pricing if you're looking to sell and cash out on your property this year. For landlords, expect some form of market stabilization. With 13,480 MOP units, a portion of them may be going up for rental, adding into the supply of rental units. So now on to private properties. Likewise, let's take a look at what's been happening since COVID. Let's go through the number of private transactions excluding landed transactions since 2020. And as we go down this list, you'll notice something very interesting, and I'll point it out. 2020, over 18,000 transactions, of which 54% were new launches. 2021, over 29,000, close to 30,000 transactions, of which 42% were new launches. 2022, we saw the decline of 19,000 transactions, of which 34% were new launches. And 2023 further dropped at 17,000 transactions, of which 35% were new launches. So what's interesting based on this data is in between these 2 years, there were a flurry of cooling measures and also a high interest rate environment. I remember personally, my own mortgage went up to 4% during this period near the start of 2023, and people were being cautious during this period. And now we go back down to the list. In 2024, we had over 19,000 transactions. It was picking up once again at 31% of it being new launches. And finally, last year, 2025, we concluded with over 23,000 transactions, of which 44% were new launches. And even for the landed market, 2020, we had 2,000 transactions. 2021, we had 3,000 transactions. And 2022 to 2025, you can see the numbers declining and hanging in the 1,002 to 1,008 range over here on the screen. It would seem based on these numbers that it might be a growing trend for people to be more inclined towards non-landed homes. This could be a shift in mentality of people wanting to have hassle-free maintenance, or even having a home where kids can enjoy the facilities, or maybe some of them are even thinking of using these non-landed homes as a stepping stone to their final landed dream. The overall private residential price index rose at a slower pace of 0.7% in fourth quarter 2025, and for the rest of 2025, the overall increase for the price index was 3.4%, marking the smallest increase in a year since 2020. And to give you all an overview price growth since 2020, we saw a 2.2% increase during circuit breaker year. In 2021, we saw a 10.6% increase, and this is when the government started panicking. They introduced TDSR, lowered it to 55%, borrowing tightened, and this was the first of many cooling measures that the government started to implement in the next few years. 2022, we saw 8.4% growth. That is when the bank interest floor rate went up to 4.5%, and it became even tougher to borrow. In 2023, we saw 6.8%, and that's when they increased ABSD across the board. And 2024, we had 3.9%. 2025, now we have 3.4%. We can see the ripple effect of property prices after the cooling measures over the last few years, and it seems like the government's objective of creating a sustainable private property market has come to fruition. And also, there will be fewer new launches unit in 2026, approximately 9,000 over units versus the over 12,000 units we had last year. While new launches are fewer, don't be fooled because there are still about 15,600 unsold private units in the pipeline. However, the OCR stock is already nearly cleared out, meaning that competition for any new launch in areas like Teng or Tampines or Hougang may be much higher than last year. All in all, if you're looking to sell your private property, the good news is the wave of MOP units, 13,480, might perhaps strengthen demand for private properties. But this is also hinging on the fact that the first-time buyers steer away from the BTO homes that the government is giving them and buy up those MOP units, then allowing those sellers to buy your private property. This is a year to price reasonably. A year-on-year growth of 3.4% signals to a slowing market and a drop in demand compared to the previous years of higher price growth. And with the introduction of harmonization for certain areas, your resale prices may be close to that of new launch prices. In today's market, don't be surprised if you see resale properties priced nearly the same as a brand new launch in the same area. The key differentiator here isn't just the price tag, it's the space. For a $2 million budget, you may be choosing between a 1,200 square feet resale unit versus a more compact, space-efficient 990 square feet new launch unit. While the total cost is the same, you are effectively paying for the newest, the modern efficiency of a 990 square feet unit without the aircon ledges, or the sheer size and potential of a 1,200 square feet resale home. So buyers may be swayed to choose the newer option for the facilities, the vibes. And for you as a seller, there's nothing wrong with pricing the resale unit at the price that you want, whether it's the bank valuation or maybe you feel it's rightfully valued that way. This segment is just to offer you a slice of what the other side is pitching against your property, or if you're wondering why people are just not giving your offer price. And for owners of smaller size private properties like a 1-2 bedroom, you might be indirectly competing with the BTO launch should they increase the eligibility of first-time buyers by reducing single buying age to 30 or increasing the household income to $16,000. And so this is just based on my experience on the ground. If you look in your area, some people may actually give up the idea of buying a 1-2 bedroom condo and going for a resale HDB option instead, because there is this sudden influx of resale HDB units out there. Now moving forward with other economical factors, we are starting with the interest rate flip. HDB loans are stuck at 2.6%, but bank interest rates have softened to as low as 1.5% in recent months, thanks to the US Fed's cutting rates and signaling towards more rate cuts. With President Trump having 3 more years on his term and the current Fed chairman ending his term in May 2026, the chairman would likely be replaced by a nominee from the president himself, and the signal is clear: lower interest rates are coming for at least the next 3 years until President Trump steps down. If you are still on the 2.6% HDB loan and would like to reduce your mortgage further by a few hundred each month, now's the time to do so. Start considering that move, especially if you are looking to upgrade to another property in the near future within the next 3 to 5 years. On the other hand, in terms of macro property factors, lower interest rates usually stimulates buying demand. Why? Let me just show you the interest to principal breakdown with these numbers. A $1 million loan at 2.5% interest rates, 30 years loan tenure, your mortgage will be $3,951. $1,911 goes to principal and the remaining $2,040 goes to interest. Now with the same example but a lower interest rate to 1.5%, your mortgage would now be $3,451, $2,232 principal and $1,200 to interest. And you can see the double whammy effect where your overall payment drops and your principal payment increases. This is one of the reasons why COVID had such a property boom. Interest rates were below 1% and that triggered a huge wave of property buyers. This is why with falling interest rates, that would likely mean that more people will consider making their property purchase this year. And of course, the best news of all, despite global uncertainty, the Singapore economy pulled off a shocker 4.8% GDP growth in 2025, beating all forecasts. We are growing faster than expected, driven by AI and manufacturing boom. While our PM Lawrence Wong said maintaining this growth is challenging and cautioned for more sustainable growth, it is still a positive indicator that the economy did well last year, and hence another nod towards potential increment of property and investment demands. But that said, of course, we will have to assess things like the median household income, mortgage to assets ratio, and unemployment rates, which we will be getting next month during the budget 2026. And so in short, I think it's a good year to be a buyer because it's still obviously a buyer market and you have so many options between the resale and the new launch listings out there. It is also a very good interest rate environment to be buying your property as well, seeing that it's 1.5% and looking to go further down. For sellers, price reasonably and focus on your unique selling point as you will be competing with more units than before. And if you want a breakdown of whatever numbers I've just presented, drop me a text at 96971000 and I'll send you the consolidated data as an easy reference document. I'm Asaf and I'll see you in the next video.